I mean, maybe I haven't said it enough, but like my interest is in hex mainly. And it's, I have bags of hex, but it does all the work for me so that I can go live my life and do that stuff. And I don't have to track everything. I mean, I do the tracking because I'm fascinated by markets and I love watching macro and I love watching crypto. I love making the quick money that's exciting and like it gives us all a chance at a better life so much quicker,
That
and
is the point of hex,
follow your
a better
dreams.
life.
I mean, hex and crypto in general, like it's opportunity central. Like just take the one you like and run with it. There's a lot of them out there that are doing good things. You just have to follow the principles in a lot of ways, but just
Speaking of
have good
runs,
tokenomics. So
yeah, tokenomics for sure. Speaking of runs, when do you think the next bull run? That's Richard.
I don't know, man. Bull run. Maybe 2025 would be a good year to say that you'd already be well above 40,000 Bitcoin. Thusly, you'd see better valuations in the overall market. Yeah, I mean, 2025 is looking pretty good right now. And this is the US dollar breaking down. This is huge. If this thing splits this triangle down to the downside, that's the end of a huge uptrend in strength. This huge parabola on the dollar that would signal, strength for Bitcoin and Ethereum, which would signal strength for Hex, because it's just like a dominoes effect. Bitcoin and like these other small moves that have been happening. Like again, you're getting compressed candles on Bitcoin too. So, juicy time to be in crypto.
So if it breaks down, if the dollar gets weaker, is that a signal for like inflation going back? Like, can you just go into that a little bit?
Yeah, I mean, if so, one of the driving factors if the dollar were to come down in value would be that you'd see a reversal in the bonds and you'd see potentially money printing. So here's the money stock of it. So this is the economy right now. The new dollars flowing into the system, and it's basically been just there's been no new money coming in. We're flatlined. So all of the value being produced in the economy right now, based on this data, is being derived from goods and services being created in the economy and not just money printing out of thin air. But, since 2020, the supply is up, still 40%. So where'd all the money go? It doesn't feel like a Great Depression. It doesn't feel like a recession because a lot of us did really well during this money printing era. So the question is how long? Sideways, That's the question. Here's something that defines that is mortgage rates. People need to live. They need to live in a house. So they go and they take on debt to do that. Well, debt just got exponentially more expensive in the quickest amount of time in history. It's 160% more on your bills, on your payments, on your debt now than it was, 2 years ago. And so that's going to make it so that people have less money to invest in things in a pre-COVID world. But because of all this money printing, ironically enough, people are not hurting that bad yet, even though the new supply of dollars has been flatlined. But who gets hurt the most during this time frame is other foreign countries. They're the ones that gets hurt, and that's why the dollar has been screaming so high and building strength against all the other currencies. So these relationships are what are driving forces in the economy. Another thing that drives the economy is like energy costs. So when you're looking at like this is crude oil, this is like basically in all your products and in your gas tank at the same time. And those valuations have come down now. So for oil to come down 40%, basically now it's at like 35 maybe percent down. That should have brought gas prices down across the country, which should have relieved pressure on daily spending for Americans consumers, and then that would give them more firepower to put back in on something like the S&P, where you're starting to see a bounce off this generational like support area. When I zoom out here, this is an index of the S&P, the Russell 2000, the Dow Jones, and the NASDAQ. And so this is compiling all the big stock indexes of the U.S. stock, in agencies, and it's basically bouncing off these old levels from 2020, which was like when we survived the COVID dip. And so, like, if this support holds, then and breaks above this yellow downtrend, it's off to the races, and then the bull market's going. The bull market could be in, next summer you could be in a bull market, and some of this stuff. But because I like to talk more conservatively, I would more comfortably like to say 2025, due to like any kind of unforeseen consequences that might come from the Fed not switching their monetary policy. And then you get a huge spill.
So what would you need to see to kind of signal the bottom of the bear to make you confident in that, and then maybe we go sideways? But yeah, what do you look for that?
I mean, so it depends on the asset. Like I basically use Bitcoin as like the first look, the major mover of where to look when I want to try to figure out a bottom for crypto. Like if we're talking, so each market's different, right? But for Bitcoin, like I like to look at, I like to assume that it can come down, right? So like a 50% down move at any time. So what am I looking for bottoming? It's more about sentiment. So like when people really hate it and don't want to talk about it and think it's going to zero, in which I'm not hearing any of that yet. And so it makes me start to think that maybe like the bottom's not in. But then like on technical indicators, you can go to look at things like this. This is where like I would say that the bottom is in. Like if you go to look into Bitcoin, pi cycle top indicator, it's basically a measurement of some moving averages that have proved this to be true. This over the lifespan of Bitcoin, that when the price crosses the orange line, that marks the bottom. So if I zoom in here, it happened in the past multiple times. When the price crossed the orange line, it marked the bottom. But in modern times, let's see where we're at here. It's close. So we're close. We're hovering right below it. And when that crosses, that's supposed to mark the bottom. And it has every other time in history for Bitcoin. So that's one thing to look for, is like different indicators that have been historically true. Moving averages are a great one.
Say, what do you think about the Michael Lyon says Fed rates equal the economy since 2008? How do you think? Do you think things have changed since 2008 as far as maybe at least the S&P, or what do you think about that?
Yeah, like the way that the real estate market is now is like there's not as much leverage in the system, so it can't be quite the same domino effect of like the large spill that happened last time, because the credit isn't being leveraged so hard, in lending for real estate and whatnot. So because there's checks and balances put in by banks to make sure that can't happen, and then all of the liabilities and all of the problems falls on the central banks and not on the commercial banks, which means that then those central authorities can like basically fix the books to fix a problem a lot easier than have huge calamities in the larger economy. So that's all been kind of solved. So I don't really see that, because they're doing magic on their accounting books on the government side and on the large central bank side, that like it's just the amount is so astronomical, and they're just swapping between, they're called like swap lines or whatever. It's just not like the way that regular civilians interact with the money system at all. And so like they can actually circumvent a lot of the problems by just centrally overriding things or like changing different levers. And then you factor the Federal Reserve in there, and they can change tax rates to affect the economy, and they can change, lending rates. Like that's what they've been doing, and increasing it. So there's all these different layers and things that you need to look at.
Just a boomerang real quick too over to ETH again. Access, do you have a preferred DEX to swap on ETH?
I use Matcha for everything. I don't know if you can swap on there. I've never swapped on the other chains. I hold coins over there is all. So I can't really answer that.
Gotcha. Michael, who bails out the Fed?
Who bails out the Fed? The Fed bails out. I don't know, man. It's kind of a weird relationship between the U.S. Treasury and the Fed. They bail each other out every day.
They just meet, have beers, and like, what are we gonna do today? I don't know. What you want to do today?
Let's I'll send you some of these notes. You send me some of those notes, and we'll trade notes.
I'll drop my truck off around 8:00. Sound okay? Just scrolling through for questions too. Did you have another chart you want to go to while I'm looking at chat?
Yeah. Just for like downside risk on Bitcoin was like the 12,000 level. It could come anytime in the next 6 months on any kind of event between now and when we get above this downtrend resistance. So just something to be aware of, but it won't last forever. So don't be freaked out by it. We've already been through the worst of the sell off on a lot of this stuff from my perspective.
Floss says, I like me a good bottom, and he cannot lie.
I just feel
like Floss can't deny.
I mean, there's just so much going good
when
on.
Bottom walks in with the itty bitty trend line and a round uptrend in your waist. I don't know.